And the end of that music and all those legal words means we're ready for another episode of Trade Masters. Trade Masters is a show presented by Tackle Trading. Go check out that 15-day free trial if you want to see what our amazing community is all about. Where Trade Masters, two traders, head to head, bring 5 picks. And when you get choppy conditions in the market are down, I particularly love Trade Masters. The last time we had a bout of volatility back in February and early March, the picks were just so good, and they helped me during that environment. They're just, it's just good times. I love the ideas, and we got 2 of the best here tonight. Defending champ Greg Holmes. How are you doing tonight, Greg?
I'm doing awesome. Thank you very much.
I'm excited to see what you got. And Tyler.
What up? What up?
All right, let's get down to business. As defending champ, Greg, you get to decide who goes first.
I will defer to my opponent.
Tyler Craig, what you got for us? Round
let's
one, let's do it.
Okay, I must say, I didn't have a problem finding trade ideas today, and I was surprised. I thought I might have to search for a bit, but I found quite a few, more than I'm going to be able to share, in fact. So I don't have a particular order here, although I'm interested to see if Greg steals some of mine. So I feel like I got to be strategic in the way I present these. Let's go with, I'm going to start with FCX. FCX is no stranger to Team Tackle. We've been pounding the table on this stock.
We've been pushing it hard for a year.
Forever. And Mark, if it ain't broke, don't fix it. I mean, it continues to generate good patterns and very high probability of profit if you've been trading the trend. So one thing I particularly like about this area right now is that it completely ignored what happened in the market this week. If you want to see relative strength, you go look at steel stocks, you go look at copper stocks, you go look at metal stocks, completely unfazed with what went on this week in the NASDAQ. So this is a breakout, Mark. We finally took out the high of the range with gusto here. FCX has basically done nothing for 2 months, believe it or not. A lot of chop, but we first, got near $40 2 months ago. So this looks pretty clean on the weekly time frame. Back it up to a weekly chart. You can see right here, nice, kind of a wider base, but taking out the highs. And look, man, I think this thing goes to $50. And so I'm going to build an aggressive trade. I'm going to build an aggressive trade with a little bit longer time frame. I quite frankly like anything bullish on FCX. I've done a bit of everything on this, I feel like, in Trade Masters over the last couple of months. But this time I'm going to go with a low risk, very high potential reward, looking for this to hopefully pull a new core. New core, for those of you that missed it, just went bananas this week. And I'm eyeing that $50 level, and I don't mind giving it some time to get there. So what I'm going to do is I'm going to go out to July, not May, not June, but July. We're going to got a couple of months. I'm going to buy the 45 call. I'm going to sell the 50 call. So definitely a +3, aggressively bullish type play here. But I think the underlying product makes it justified. So we're going out to July. I'm going to buy the 45 call. One thing that we mentioned in the halftime report today, when I was building this type of trade on, I can't even remember what I was doing it on, but we talked a little bit about the volatility skew. Out of the money calls in FCX trade at higher volatility levels than at the money calls. Slightly, not a big difference, but I'm buying a 45 call, selling the 50. Basically, this is going to cost me about $1, just $1.13. So I'm risking $1 to make 4. Hoping that this gets up towards 50, but even if it doesn't, even if we just get up to 47, I double my money. You get up to 50, 150% return with a lot more potential as time passes. So I like the risk reward here, and I like the fact that if FCX just gets going, I got quite a bit of upside.
All right, so I like the trade. Copper itself is strong as that whole reflationary trade. We've been very pro copper. FCX is our at Tackle Trading been our vehicle of choice. What about a naked put? Just if you were to sell one, to say, all right, that's a nice short-term trade idea, but let's say I wanted to get into FCX long-term using naked puts as my potential entry vehicle. Where would you look at selling one?
Naked puts are tasty too. I think you get an 11 delta here, Mark. You get about 50 cents. 48 now. You probably get 50 if it pulls back. Margins 350, so your ROI is great. You're down at 34, which is down here under the 50-day moving average, under the prior pivot low. Yeah, I like that one too.
Back towards the bottom of the range. I like that a lot too. All right, FCX treated us well at Tackle Trading for a year. I don't see that changing in the next 6 months. Greg, round one, what you got for us?
All right, well, I'm going to save my mental play for the last one. I'll see if Tyler snakes it or not. I'm going to go with the financials. Financials have been strong. I'm going to look at our friend American Express. So Amex here, as you can see, the chart overall, just kind of a juggernaut, this thing. Even when we get pullbacks, the pullbacks are times to step in and buy. The breakouts have been decent as well. Just really no issue with this thing. It's past earnings. It did fine on earnings. There was no issue there. And so now we're at this point here where we're breaking out of a very shallow, very short-term high base there. I just like where this is headed. I don't see this slowing down. The XLF, the financial ETF, is rocking and rolling still, and this is just going to benefit from that. So this one here, pretty simple, little bull call here. I like the 155, 165 bull call for June 18th. Tyler can throw that together for me. So you're going in the money, and then you're going out to where I think it can get to. I think it can get to 165. You're risking $4 to make about 6 there, somewhere in that neighborhood. So yeah, I love the setup and I love the momentum of this stock, and I think it's just a runner. So very nice.
And these first two picks, I've been using this phrase the last 4 or 5 days. The market, because tech sells off and this and that. I've been, this, even if the broad markets do nothing, it's a stock pickers market. But really what this market is, and I really believe this, is it's going to be a stock analyzers market. Not just looking at the chart, but what is strong? Why is it strong? Why is tech weak? Trying to understand that. Understanding that cyclical theme that's taken some time off, not taking time off, and it's getting going again. And, when things get going after taking some time off, there's room to run. So this is a good time. You're not entering overextended areas in energy, in finance, in industrials. You're entering at the start of what could be a good little run for another leg up in these areas. So I love both picks. Just good stuff. Now, Greg, do I love your joke? That is always the question.
Yeah,
Picks I love.
I don't know. Let's give this one a shot. I got my best friend a fridge for her birthday. I can't wait to see her face light up when she opens it.
Say that again.
I got my best friend a fridge for her birthday. I can't wait to see her face light up when she opens it.
Okay. I love the AXP. I love the timing, the joke. Let's just say I'm going to love AXP. Tyler, round 2. That's a stellar professional round 1. Great, just great choices. What do you got? Let's keep up the momentum.
Yes. I got a very nice bull retracement pattern here. Seagate Technologies, STX. Take a look at this, Mark. You've got a nice, not even more than nice. Look, this thing this year has gone from $60 to almost 100. Massive momentum. Look at the move after earnings the last 2 times. Really good pop here. Really good acceleration here. They're doing something right on the fundamental side. What is nice about Seagate, this is a technology company, but because it was starting from such a high vantage point, even though it participated in this week's pullback, really this week's support break in the NASDAQ, all it ended up being for STX was a nice little 4-bar retracement. I like the little bit of slowing momentum today. Might need another day or two, but I'm telling you, this has got to be one of the cleanest trends with one of the best looking pullbacks in the technology space. So trigger for me would be over today's high. Tight stop would just be under the 20 MA, but pattern wise, that's what you're looking at. Bull retracement, just waiting for buyers to emerge here. I like $100 as a potential target on the next advance. Might take a couple of swings to get there, but I think that's your logical upside target you're shooting for. And because earnings is out of the way, if we take a look at implied volatility, it's not super duper low, but it's low enough where I want to do a bull call spread. I would keep this pretty simple. I would be looking to buy the 90 call and sell the 100. And to give it a little bit of extra time and to make it a little more conservative, I would go out to July. And so if we take a look at the July options, you buy the 90, you sell the 100, you're paying $262 to make 738. I think I'm doing my math right there. So it's got a really good upside risk reward. It's cheap enough where I think you don't need a tight stop loss. And I think if this recaptures its magic on the prior advance, it's got a good chance of getting to 100 in the next 2 months with a big payout.
You know, the thing about memory companies right now is memory usually, you know, Micron, Western Digital, Seagate, they tend to do well in the cyclical thing, which is one of the reasons that they have had such a run, right, playing that playbook. And so, like, I don't know if they like finance and energy in some areas, but they do play in that theme. So if it does recapture its magic, if it does get going again, it still plays into that cyclical theme, overheated economy, good economy type theme. So there is definitely a theme behind memory as a whole. And so, yep, nice theme. All right, Greg, round two, what do you got?
All right, since we had this little weakness that we've seen in the tech sector and just in the markets a little bit recently, I'm going to jump the fence and go to a bear pick here. Throw up Boeing for me, will you there, Tyler, please? So Boeing here, we've talked about this before. This thing's breaking down from a descending triangle pattern. You know, typically we look for those to actually pop to the upside here. But as you can see, this one's breaking down. This is just it's past earnings. Again, you know, kind of rotating out of this stuff as well. I like this setup here. We've broken a very serious level of support there. It showed they tried to push it back up a couple of days ago, yesterday, I guess it would be, tried to push it back up and then it failed again today. That's just another sign of weakness as far as I'm concerned. For this one here, like I said, pretty simple for me. This is a bear breakdown. I'd like to do a bear put on this thing. You could enter below the low of that candle, that yesterday's candle, if you so desired. I like the bear put here at 230, the June 18th, buy the 230 and sell the 215.
I mean, okay, so what's your specific, so we give that strike prices again?
So it's 230. I'm going to buy the 230 and I'm going to sell the 215 there.
So a pretty wide spread.
Yeah.
So why did you choose a wide spread instead of a tighter spread?
Well, I actually looked at the chart. So if you go back to the chart for me there, Ty, I believe this thing its next level of support is going to be around that 215 mark, right? So you've got some, now obviously there's a bit of a chop there. So, you know, you could run into it, but I honestly believe that that's where, when I start to set up bull calls or bear puts, I look for the next logical spot for it to slow down, because that's really where I want it to get to. Because even if I don't wait the whole time through, if it hits my short strike price, then I'm getting the maximum I can at that point in time. So that's really how I looked at it. I'm going in the money here, obviously. I actually like to go in the money. Sometimes you can get a better risk reward if you go out of the money, as Tyler did on one of his picks there. But I like going in the money here. You've already got a head start. You've still got a decent risk reward. And like I said, I fully believe this thing's getting to at least 215 as a first target here.
I mean, the technical weakness is pretty strong there. I mean, clear break, clear. Where's your pinpoint trigger, right?
Yeah, just below the yesterday's candle is as far as I'm concerned, like that would be actually super conservative. I would actually, if this thing got below today's low, I'd have no problem putting this trade on myself just because of the weakness it showed. If you wanted to be a little bit more conservative, the low of yesterday's candle would be fine too.
Okay, and then just one last question. So, like a lot of traders, they don't do bearish trades, period. How do you decide when you're going to do bearish trades as a whole, and how many do you have relative to the bullish trades in your portfolio?
Yeah, so there's a lot of schools of thought for that. Myself, I actually don't even look at it, to be honest with you. What I do is I look at each individual trade, and then if I see, when I'm doing my top-down analysis, if I see the market turning a little bit, then I'll take a look at my overall portfolio and say, okay, am I too bullish? Am I too bearish? Am I, more sort of the neutral side? But when I'm actually putting on trades like this, I look at the pattern, I look at the setup, and I look at the individual trade, and then I trade it this way. Because what I've learned over, more than a decade here is that it doesn't matter if you're in a bullish market, there's still good bearish trade setups out there. If you're in a bear market, there's still good bullish trade setups in there. So I kind of look at it, I compartmentalize it, if you will. And so for this one here, we did show a little bit of weakness the last couple of days. Obviously, tech got hit. The other indexes, S&P took a beat down yesterday. We're starting to see a little bit of weakness there, but I'm less concerned about that, and I'm more concerned about how this is really showing a lot of weakness, and that's what I'm trying to punish the weakness and reward strength, and that's what this play is all about.
Good stuff. Good stuff. All right, love it. Joke. Can we get in a consolidation pattern with the joke pattern here?
I'll see if I can do better than the last one for you. This shutdown is bad for everyone in the service industry, but it especially sucks for men. We're losing $1 for every 79 cents women are losing.
I like that. I like that one a lot.
And send the hate mail to mark@tackletrading.com.
No, but no, you're acknowledging the gender wage gap, No, absolutely. That's a funny joke. All right, Tyler, round 3. Let's keep it going.
Yeah, all right. I'm going to stick with tech here. I was looking at Microsoft. There's some of these big cap tech stocks that are starting to get to some interesting levels to where I may want to start bottom fishing. And I like doing so with a cash flow play. So I was looking at Microsoft. It had fantastic earnings, but as we all know, good earnings got sold in these big tech titans. I like the pullback here to old resistance. Also got the 50-day moving average rising pretty quick. I don't know if it gets bought here or 240 or 235. I just know somewhere in here I'm interested. When you look percentage-wise off the peak, 263.19 times, let's say you get a 10% correction. That takes you to about 236. This also has really good support right around 226. So I thought, hey, if I can get a bull put spread under 226, I'm interested. So I was looking at the June 225, 220 bull put. It is almost at 50 cents. And so I need a wee bit more weakness in the next day or two. It's got a delta right now of 15. I think if right now it's at 45 cents. If I can get 50 cents in the next day or two for this 1 month, $5 wide bull put with a 15 delta, this is my preferred way of bottom fishing in some of these good looking tech stocks that are just getting beat up. And I'll leave it at that.
I mean, will you highlight me? Because, I had a student ask me the other day, when do you do bull puts? And I'm like, I do bull puts when there's a support level I can bet on. And, if I have a support level I can bet on, then I'm interested. Now, you had took a month off and you had numerous tests in that support range at 230.
Yeah.
I mean, so I have what I would look for. And then I like to sell the bull put underneath that support level. And so this is pretty textbook. Find a support level you can bet on, put the bull put underneath that. Are you looking for a specific trigger? I mean, because we got some short-term really, pretty heavy downward pressure right now. Do you wait
You
for a
do.
doji? Do you wait?
Yeah.
Do you wait for? I mean, what are you waiting for to execute? Because I like the price targets. Now, talk to me about when you get in potentially.
Yeah. Well, the irony with trying to fish for a bottom with a credit spread is it actually becomes more appealing the lower Microsoft goes, right? I mean, if I say, look, Microsoft is one of my prime targets. I think the NASDAQ sell-off is eventually a buy. I want to do it in a healthier name like a Microsoft. The more this thing pulls back, maybe I shift this to 220, 215 as my bull put, or 215, 210. It's at an area now, Mark, where it's pulled back enough where I'm interested, right? And I feel like it's very common for traders to miss trades because they waited for a couple of green bars and like, oh, I missed it. If you want to get better at nailing the turning point, you have to start to anticipate, kind of thinking multiple moves ahead. And it's not that you enter the trade before it triggers, but you prepare it, you prep it. All right? That's what I'm doing here with Microsoft. I'm teeing up the trade. I'm saying if the thing turns around, this is where I would deploy my credit spread. To answer your specific question, yes. I mean, look, it's red bar, red bar, red bar. We're at yesterday's lows. If this thing gaps down tomorrow and has another big red bar, I'm not going to pull the trigger. I would like it to break a prior bar's high, but I'm being a little bit cute here, Mark, because I really want to get 50 cents on this thing. So if Microsoft is listening, I would like one more red bar, and maybe a doji or something where I can get 50 cents while it's triggering with that 225, 220 bull put. So yes, I want some confirmation. I don't know how it's going to come, but typically breaking a prior day's high is what I look for.
Yeah, I love the analysis, and seriously, there are certain traders that started in the last year that could really struggle with new market conditions and some of the things that didn't work. Listen, the last year, smashing the buy button worked. Didn't matter what your strategy was. The analysis you're hearing tonight, I mean, we get this all week long in our live shows, in our traders lounges, in our scouting reports consistently. This is an amazing community because of the people, but dang, you get great analysis like you're getting tonight. Go to the store tab, tackletrading.com, sign up for that 15-day free trial to see what I'm talking about. All right, Greg, let's keep up the momentum. Great show. Exactly what I wanted tonight. What do you got?
All right, so I'm going to go to Caterpillar. The Dow has been the strongest of the indexes without question. If you look at the futures chart for the Dow, you will see that it's at the top of the range, unlike the rest of the indexes that are, the NASDAQ has coiled over, the Russell has coiled over, and the ES is kind of, basically in limbo. So with the Dow being the strongest, I really like this breakout of Caterpillar. We got the breakout today. We're past earnings. That's no longer a concern. We've got basically a month and a half here, maybe a month there of a high base pattern, a real nice high base pattern. Now we're breaking out to a high. I believe that's probably an all-time high, isn't it? Or at least a 3-year weekly high.
It should be. Yeah.
Yeah. So it's up there. Like I said, I just see so much strength in the sector and so much strength in the index. This is a big proponent of the Dow. We've got our breakout there. So now it's just a question of building out a trade. The trade I like best on this one, again, going back to the well that works. We've had some decent trades from a directional standpoint. The directional standpoint I like here, bull call, short term, June 18th. The 240, 260 bull call. Now, I wouldn't fault anybody if they wanted to go further out and take this for a little bit longer ride. I just really like the way this set up in the June options for the 240, 260. And, obviously at a high, there is no question this thing can get to 260. No question at all. So,
I mean, will you show me the chart again? It is that... it just feels like you're at the beginning of maybe the next leg up in a lot of different areas, right? Industrials, finance, and I love when they, AXP, you're a few days into it, but it had taken some time off. Caterpillar had taken the month of March and April off. And so you're just getting in. And so, what are we triggering over today's high? Maybe a little bit above it. 10%?
Yeah, 100%. You could do 10% of an ATR or above the high. I think because it's already broken out, I think you can get into this as soon as it breaks that high for sure.
Yeah, no, I mean, just a strong area of the market, classic, fits the general theme of what could be hot in the month of May and June, and taking some time off before that. Pretty classic trade setups, pretty great. I loved your last joke, Greg. I loved it a lot, maybe too much. What do you got for us?
Okay, a little COVID joke here for you. As a responsible employer, all my staff are in a 2-week quarantine. Productivity is through the roof since nobody can leave the office.
Okay, I get it now. Listen, I love the last joke. I loved the last joke.
Okay, so I know what kind of jokes Mark's looking for.
At least tonight. Tyler, this has been a great show so far. 6 quality analysis behind the 6 picks. Let's keep up this great show.
I got a choice for you because I'm not gonna have. I have too many. I'll give you a telecom cash flow play or an energy cash flow play.
Give me an energy cash flow play.
All right. Energy stocks have been solid, just like financials here recently, especially today. If you look on the ETF side, sort by percentage change, it's all energy that was ripping today. I like the breakout. I like the breakout over, $50 or so on XLE. I think this could be a leg higher, another leg higher in energy. And I just like how it cooled off there for a while, Mark. Everybody got all hyped up on energy stocks. And then the market's like, no, not going to make it easy. You got a decent retracement, little false support break. And now we're breaking the top side. I think 55 is an easy upside target. This, because it's an ETF, because it's $50, because the volatility is low, this actually sets up pretty nicely for a bull call diagonal spread, or a otherwise known as a poor boys covered call. So what I would do here is I would go out to July, buy a July in the money call, maybe the 50 strike, got about a 65 delta. And then I would sell a June 40, 30 delta, something around there, maybe the 55 strike, actually, 33 delta against it. You're paying 280, dirt cheap. Take a look at the risk graph. Got a nice little covered call type shape here. If it gets up to 55, I'm making $75 today. Could be almost doubling my money if it's up there near expiration. It's a great risk reward for a cash flow play. And in terms of a stop loss, I mean, really energy would have to come back below the 20 MA for me to get shaken out of this. Call it $49. I'm risking about 100. So risking 100 to make, 100 to 200, depending on how long you want to stay in. But it's my kind of trade for an ETF that I think is going to gradually move higher over the coming weeks.
No, it's solid. But give me that option chain again. If I was to sell a naked put at $47.50 or $50 for June, what kind of credit am I getting? 47.
At 47, you can pick up 50, $52, and you're getting a 10% return at 47. And you got good distance there, Mark. That's not a bad trade either.
Yeah, I mean, because I just want to own a little bit of energy, and naked puts are always my preferred, and I like to get it right near or above that support level, which is about 47.50-ish.
Yeah.
So if I go maybe even the 48s there, but solid. Like, listen, energy. The theme behind energy is too easy. We've shared it a million times at Tackle Trading. Come see the, pro members, what we're talking about. We've been talking about this for a while now. It's an easy thing. All right, Greg, great show. 4th round. Give us a pick.
All right. Well, since Tyler's got all this cash flow, I'm going to go that road too. Let's look at GDX.
I've been busy. I've been busy, Greg.
What have you done here, Tyler? Anyway, I love the fact that GDX here, we've talked about how it's in the reversal stage here. We saw the pretty solid beat down from last August right up until, basically starting in March of this year. Now what we're doing is we're putting in these higher highs and higher lows. We're trending up nicely. We've just come off the bottom here, 4 days ago, 4 trading sessions ago. We've got the 50 MA coiling upwards, starting to move upwards there. I just really like the case for gold right now. And what I like more is the fact that you can get a very decent credit out of GDX with a trade. So what I'm looking at is a bull put spread 30 days out. Just a cash flow trade here. So GDX bull put spread 34, 31, 30 days out. If you go to the trade tab there, Ty. So right on that June 4th. Yep, the weeklies. So I like the 34, buying the 31. So you're $3 wide, so $3 worth of risk, and you're getting well over 10%. You're getting quite a bit more than that, actually. The other part that I like about this is you can play this so many ways. You could be the type of trader that if it hits your short strike, you close out the trade. If it starts to pull back and you're interested in loading up on gold, you could buy back your long put and take possession of it as well. So there's a lot of different things here. And I guess for me, it's just the case for gold that we've got, with the inflation concerns, things like that. And now we've got a really good technical setup we've got 2 higher lows and 2 higher highs now, and we're starting that next leg up. And I think that next leg is going to get us at least to that 200 moving average that Tyler has there. So it's just a quick, easy cash flow play that has good, solid technicals, and it has a sentiment behind it as well. So,
now listen, I really do think people that cash flow gold over the next year are going to be very happy with their returns. Gold's not the type that is going to make you instant rich, but like not every part of your portfolio has to be a rock star, exciting mile a minute. I think gold from a cash flow perspective is set up really well. We've covered that in the halftime report for weeks. Love the pick. Love the pick. All right. 1 for 3 on jokes, according to the Markometer.
All right.
Let's get back to 500.
Let's see if I can redeem myself. My wife has evil lessons with Satan every week. I don't know how much she charges.
back to 500.
2 and 2.
All right. Listen, it's been great. I expected nothing else tonight. Market conditions. I mean, this is the thing. Markets do not have to be screaming up as a whole to make money and do well. It's where education, where a good team comes into play. I've loved this tonight. It has been perfect. Tyler, we got 1 round left. This is your last pick. This has been a great, great show. Give me a pick.
Yeah, I saved a good one for last year. I was looking at my ETFs. So I have a stock list and an ETF list, and I wanted to have something somewhat bearish. And I like 2 things about this setup in small cap biotech, XBI. And this has decent liquidity, so you can definitely play options on this. This is kind of front and center when it comes to the area of the market that it has been out of favor. So this has been moving with the NASDAQ, with growth stocks as well. And it's knocking on the door of a potential support break, right? So you could say, all right, let's do something bearish off of that, looking for a break of support and downside follow through. The other thing that I looked at was this is one of the few ETFs that has high implied volatility. So because they're spooking the children here, and they're drumming up demand for options, and that is inflating option premiums. So we can build some interesting cash flow plays around this XBI breakdown. The first idea is we could just sell some out of the money call spreads, bear call spread, go with the recent weakness, assume that's going to continue. So I was looking at the June 145, 150 bear call. So 145, 150 bear call. You're above a couple of resistance levels. Biotech would have to have a pretty nice turnaround for you to get hit at the 145, which I don't think is going to happen. But if you take a look just at that bear call, 145, 150, it's about a 15 delta. So you got about an 85% probability of profit, getting around 50 cents. Okay, so that would be idea number 1 if you just want to lean bearish. If you wanted to do just a pure volatility play, taking advantage of the higher IV, and if you didn't think that this was going to sell off too terribly much, given that it's already down 5 bars, you could also come in and do a far out of the money bull put and just build a pretty wide iron condor. And so if you take a look at what's available on the downside, go down to say, 110, got about a 13 delta, sell the 110, buy the 105. Collectively, you're getting a good $1.05 out of this on a $5 spread. You're going to have a pretty good risk reward for this condor if you're willing to bet that it doesn't break 110, but stays between 110 and 145, which normally you're not able to get that wide of a range for a 20+% return. But because of the high IV, you've got kind of a unique situation here if you don't want to just go bearish.
I like it. Obviously more of an advanced strategy for some individuals, but the logic behind it is sound. And, that support level. So if you broke, the only thing I would have if I put on this trade is I would want to make a decision if you broke either that resistance or the support. Mm-hmm. Like, what's my trade management? Because I don't want to turn a good idea into a loser because I'm stubborn. So let's say support breaks. Do you get out of the bull side, put side quick at a small loss, still having your bear call on?
In this case, no. If you were going to get out of the bull if support breaks, I wouldn't do it to begin with. I would just do the bear call. If you're going to do both sides and do the condor, you have to give it room. So me adding the bull put is not me betting support's not going to break. It's just me betting that it's far enough out of the money to where if it does break, it's not going to get to 110. It's going to chop around in here and not hit that 110 level. The other thing you could do, Mark, if you were concerned about that, is it would be legging in. Leg in. Do the bear call first, and then if you get another couple of red bars, then maybe put on the bull put if it gets a little more oversold. That's the way I'd play it if you were concerned about that support break.
Makes sense. All right, Greg, great show tonight. We got one pick left, and you're bringing it.
All right. God, I gotta flip a coin here. Since Tyler's gotten a little bit more complex there, I'm gonna go simple. Let's go to Bank of America. So back to the financial space again. We know that financials are doing well. We got another breakout today of a high base pattern with Bank of America. We've got confirmation of this breakout now. Again, I believe this is an all-time high, but I'm not 100% sure on that. It's definitely a one-year high, as we can see here. I just like this as a simple stock trade. Easy peasy. Get in above the high, get your stop loss down below the noise of that last high base there. Your target-wise, you're looking at 45 and beyond. Just a nice, simple stock trade. It's a $41 stock. So it keeps everybody, even with the smaller accounts, you still have opportunities here. I just think this thing's, if you look at the slope that this thing has been moving on, it's just kind of creeping along, which is fantastic. I think that creep continues. We've seen that we've got some strength in the financials. The moving averages are all running in the right direction for me. I just think technically this is a beautiful setup. We've got the confirmation of the breakout, pop in above that high, easy peasy, simple stock trade.
I like the space so much. People talk about rising rates. I think it's an inevitability, right? I mean, the inflation's too. They're going to have to raise. Financial is going to do well. I like the long-term aspects. I like the short-term aspects. I like everything about financials right now. I like the pick. All right, let's see if you have a winning record on jokes, though. This is your last shot. The Marco meter says 2 really funny and 2 I had to think about, which I don't like in jokes.
I was going to say, okay, now I've got to change my last joke. I don't want you to have to think too much. Okay.
Listen, I don't want to think.
All right. So I just heard Finland have just closed their borders, which means no one can cross the finish line.
That's I can't believe I've never heard. That seems like that's a joke you would have heard before.
It does.
All right, that's a winner. Listen, You know, I was going to give you the win if I liked the last joke and give you the loss if you didn't, because I've thought tonight's been amazing. You made me laugh, Greg. You're the winner tonight. What's your last words?
Just look for those right setups. That's what I'm seeing in the markets right now. We've got weakness in some areas. We got strength in others. Play to the strengths, punish the weakness, look for the good setups, and just continue to work the trades out. I think that's really all you can do in this kind of market.
Yeah. And pro members, we have Traders Lounge tonight with Greg is hosting. Starts in 50 minutes, 8:30 Eastern. You can find that on the events tab at tackletrading.com. Traders Lounge is a show where basically if you have questions, I want to look at a chart. Could you analyze this for me, Greg? If I have a question, I'm new and I'm having a hard time with an order, or I'm new and I have a question about option. Doesn't matter. Basic, advanced, intermediate, everything in between. If you have a question, Traders Lounge is the place to do it. We hold it every Wednesday night at 8:30, and we hold it every day. The market is open at 11 a.m. Eastern. Great for new traders and advanced traders alike. Traders Lounge, be there tonight. Pro members, thank you, everyone. Great show. I love the ideas. I'm going to be taking, I got a lot. This is what I like about Trade Masters. More ideas than I know what to do with. Gives me something to look forward to tomorrow when the market bell opens. Take care, everyone. We love you all. Have a wonderful, wonderful evening.
Thanks, everybody.
We're staying overtime.
Yep. I got more jokes.
Tell another joke. Well, we're on this recorded. We're waiting for our...
This is the one I didn't want to tell you because I didn't want you to have to think, but I'm going to tell you anyway. So I was 16 minutes late for my first math lecture. Then I was 8 minutes late for my second and 4 minutes late for the third. At this rate, I'll never be on time.
See, I had to think.
See, I know. That's why I didn't use that one.
I have no doubt that it is funny.
Okay. I got another Mark joke here then maybe. The last thing my grandfather said to me before he died was, "It's worth it to spend money on good speakers." That was some sound advice.
It's bad.
All right, one more here. My professor accused me of plagiarizing. His words, not mine.
I like that one.
All right, I'm out of jokes now.
What was the wife and the devil one? Say that again.
Oh, it was my wife has evil lessons with Satan every week. I don't know how much she charges.
So the wife is the one teaching Satan about being evil.
Got it.
I got that one right away.
I didn't even get that one. I don't know how to.
Left-hand corner.
Let me try this. Let's. Oh, there it is. Yeah, top left, it says live. How do I take it off?
Yeah, it says view stream or copy streaming link, but it doesn't say how to stop it.
Look, you bring us here to give us good picks, Mark. We don't know how to do this.